Oh, we are live. Struggling with business growth? For all you know, poor record keeping could be the culprit. Good day, everyone. You are welcome to today's live stream. Just before we do justice to the topic of the day, I'd like you to let me know where you are watching from. Tell me the name of the city. I'll appreciate that you share this video, like it, and in fact, ask your questions. If you are coming across my video for the very first time, please do not hesitate to follow. And peradventure you are watching me on YouTube, please subscribe and click the bell so that you will not be left out of our future videos. Once more, you are welcome. As usual, my name is J. Taiwo Popola. Today, we want to look at the topic poor record keeping on business growth and how to fix it. Poor record keeping on business growth and how to fix it. However, today we'll be discussing only poor record keeping on business growth. And by the grace of God, next week we will look at how to fix it. And I want to encourage you, please make sure you watch this video to the end, and in that case you will have a full benefit and it will give you a full insight into your business. Shall we just dive in? In the dynamic world of business, effective record keeping is often the unsung hero behind sustainable growth and success. Unfortunately, many businesses, especially small and medium enterprises, SMEs, underestimate the importance of record keeping. Poor record keeping can have detrimental effects on a business, impacting everything from financial health to legal compliance. Understanding these impacts and knowing how to rectify poor record keeping practices is crucial for any business aiming for a long-term success. And that's why, if you desire having a legacy business, you must take very, very good care of your record keeping. And so let's look at the impact of poor record keeping. Number one thing that poor record keeping, the number one impact of poor record keeping is on your financial management. On your financial management. Poor record keeping can lead to financial disarray. Without accurate records of income, expenses, and cash flow, businesses can struggle to understand their financial position. And these can result in overspending, missed opportunities for investment, and an inability to make informed financial decisions. Furthermore, it becomes challenging to secure loans or attract investors when financial records are disorganized or inaccurate. Number two impact of poor record keeping is compliance issues. Governments and regulatory bodies require businesses to maintain precise records. Failure to comply with these requirements can result in penalties, fines, and in fact, legal actions. For instance, incorrect tax filings due to poor record keeping can lead to significant financial losses and damage to a company's reputation. In extreme cases, non-compliance can even lead to business closure. At this point, I'd like to remind you again that you share this video. Share it to other small businesses so that they can benefit, and also like it, and in fact, ask your questions. And if you are watching me on YouTube, please do not hesitate to subscribe to our channel and also click the bell so that you can be notified anytime we are here. Number 3 point, the number 3 impact on your business financial record is operational inefficiencies. Disorganized records can cause inefficiencies in daily operations. Employees may spend excessive time searching for information, leading to reduced productivity. Poor record keeping also hinders effective inventory management, causing stockouts or overstocking, both of which can negatively impact sales and customer satisfaction. Number 4 thing that number 4 impact of business growth on poor record keeping is strategic decision making. Accurate and up-to-date records are essential for strategic planning and decision making. Businesses rely on historical data to forecast trends, set goals, and evaluate performance. Without reliable records, making informed decisions becomes nearly impossible, putting the business at risk of making costly mistakes. And lastly, for this segment, and before I go into that, we have an ebook for you on how accounting and bookkeeping can help you to grow your business. Please check it at the comment section and make sure you download it. So the last point, which is number 5, is customer relations. Poor record keeping can affect customer relationships. For example, losing track of customer orders or preferences can lead to dissatisfaction and loss of trust. Consistent errors and delays in fulfilling orders can damage the business reputation and result in lost customers. So, poor record keeping has a tremendous impact on success of businesses. And in fact, no wonder small business owners are fond of eating their capital and profit because of poor record keeping. Let me just remind you before I round up. I want to encourage you, share this video. If you are coming across our way for the first time, follow us. Like the video and also ask questions. Ask questions. Ask questions. And if you are watching us on YouTube, please subscribe to our channel. Click the bell so that you can be notified anytime you have a new video. Until I come your way next week, please take notes. Poor record keeping does a lot of damage to the growth of businesses. Thank you for watching and stay safe.